Hello, welcome friends. Myself Rajiv Garg from Bombay Stock Exchange, Northern Regional Office, Delhi. I feel honor and privilege to be the part of MAT Distance Learning Education Program. Today the topic assigned to me for the area of my expertise and knowledge from last 13 years is the functioning of stock market, working of stock exchange, role of stock exchange, role of capital market per se in the Indian economy, and the role, various products, risk involved, and the whole mechanism and the machinery, but how it all happens. So let's discuss one by one. As you know, the Bombay Stock Exchange is the oldest stock exchange in Asia. It's a 140 old year institution. It's working since 140 years for the service of nation with various products and services in the field of capital market. Now first we need to understand what is the role of a stock exchange. Stock exchanges are the places where buyer and seller of various stocks and securities come together through electronic platform for the exchange of securities and money. First we need to understand why all this mechanism and machinery is needed. Any country, any economy needs a lot of fund and money for their long-term growth, and as we know, the equity is the best source for the long-term capital. Equity is the best source for long-term capital for the corporates, companies and corporations. They need lot of money, tons of money, like in the developing countries like India, for their various projects, expansions, infrastructure growth, future growth. So all are looking towards stock market for the raising of equity capital. The first and the paramount function of any stock market is to raising the money. Capital collection, capital mobilization, basically the channelizing the savings into investment. That is the foremost function of any stock market, any stock exchange, or any capital market per se. Bombay Stock Exchange is the pioneer in this field. We have the highest market capitalization, highest number of companies listed. More than 5,000 companies are listed at BSE. Because we believe the capital mobilization, channelizing the saving into investment is the core function. Later on, these companies got listed at the exchanges, trading happen. The second function of the exchange comes to the trading. When it comes to trading, then it's the buying and selling of the securities. The trading part happens, investment happen in the secondary market, entry exit happens for the mutual fund, foreign institutions, FI money, and lot of other products related to the secondary markets being traded in the markets. Now the whole mechanism, how it works nowadays, is the technology which plays the important role in the functioning. Bombay Stock Exchange is nowadays the fastest stock exchange in the world with the response time of 6 microseconds. Technology plays very important role in the functioning of stock exchanges, because nowadays majority of the trading happen through algo trading, automated computerized trading. For those people, it is like a fastest finger first, and the speed at what they get the information and the speed at what they analyze the data and give back their orders to the exchange is the most important. BSE is the fastest exchange not only in India but nowadays in the world with 606 microseconds. Now we comes to the various products. As I earlier told, the trading and the investment, there can be two kind of functions in the field of stock market. But nowadays what we see in general notion in the mind of a investor or the layman or general public per se, stock markets are perceived or seen as the places of lot of trading, speculation, gambling. People, it's a general layman feel it's a place like for a sort of a gambling happening or a trading happening, lot of speculation, kind of legalized casinos. That has been the one part of the exchanges. It depends upon the individual how they participate and how they take the things. But the first function is the investment, and that's from national point of view, from the country and the economy point of view, that is the most important function. As Bombay Stock Exchange, we believe that is the most important function, and we are putting the emphasis and the focus corely on such products that helps the investor for the long-term capital generation, wealth generation, and at the same time it serves some economic purpose for the country. Anything which exists in the society should have some purpose for the country itself. We are focusing on a lot of products like ETFs, exchange traded products. These are the products for the long term investors. These are the products directly related with the indices or the various sectors. Exchange traded funds is the most popular way of investment in the US market or the most of the developed European market, but unfortunately it has not picked up so far in India. But we are hoping and we are putting a lot of focus on ETFs, that ETF will come up, and the new generation and the youngster in India and the investment culture is growing day by day. The ETF should be the most preferred product in the investment bouquet. In other things, we are focusing on the mutual fund. Mutual fund is already picking up from last 1.5 years in India, but it is going through the order routing is also happening through stock exchanges now. And the BSE is provided a online platform for placing the order for mutual fund redemption and the purchase of units. Mutual fund is the another safest way for the investors for the long-term investment. For retail, from small to medium investor, we feel investment is the only way. Trading could be the another area where you can trade in equity derivative, currency derivative, and various kind of speculative products. Those kind of products have their importance at their own place for the specialized traders, and the people have the specific skill of set lot of money and people who are ready to take some kind of risk. But from small to medium investor who come first time to the market, who regularly want to invest small part of their saving, mutual fund and the ETF are the products they should first look upon. And we are trying our best. We are doing a lot of education seminars, workshops, lot of events pan India, approximately around 3,000 such seminars, events, workshops, seminars, webinars, meetings we conduct pan India on these topics for education of the investor, for creating awareness on such product, for guiding the investors on the various happening in the field of capital market. We are also doing a lot of events for the knowledge of the market participants. As I told, mutual fund and ETF, their bond and debt market is also there. But Indian stock market, when we talk about stock market, we are talking about equity shares. Bond and debt market is another vibrant market which we feel in the coming days it should be more activity could be happening in this field also, because these are the safe products. And then interest rate future is the another new product which has entered in the market last 2 years back. Then currency derivatives, these are for the importers, exporter, and the corporates who have some exposure on the currency, offshore currency, they want to hedge their positions. Lot of other products are coming on the field of stock market, and we believe the government will understand the need. There should be single platform in the field of financial market, because the stock market, we have the excellent network of brokers, sub-broker, authorized persons, branches. So we cater the almost the each and every nook corner of the country. So any kind of financial inclusion for all kind of products, this is the best platform to be looked upon. Another thing is, it is the regulated by the SEBI, Security Exchange Board of India. This is perceived the one of the best regulators so far in India. A lot of compliance, regulation and guidance, rule regulations are already in place. Very heavy regulations are in place and very well enforced rule regulations. All kind of documentation, if you compare per se for any other industry, we feel we are the best regulated and the best enforced industry. Yet lot of things to be improved, yet lot of things continues because the improvement is continuous phenomena. But as compared to other industries in financial field, stock markets are the well regulated. So this is the platform to be used by government for further financial inclusion, and all kind of financial products should be routed through the stock exchanges and this capital market platform. But the need of the hour is to understand for investor the difference between trading and investment. The perception of the stock market itself has become it's a trading and speculative platform. That is not true. We need to change. We all are working towards that. We are trying our best at Bombay Stock Exchange to give more and more such products which are risk-free, return, fixed kind of return in the nature, or minimum risk, or the combination of both. So investment related products we are preferring. At Bombay Stock Exchange, we are opening more and more regional offices, zonal offices, to give the more and more services to the clients, to the investors, to our trading members. We have the proper investor protection fund. that has been meant for the education, investor education, various kind of services to the investor in the every part of the country. In India, as of now, approximately only 3 to 4% investor invest in the stock market, in the capital market, because in India stock market is not preferred because it's not considered as a good asset class, or it is not well guided knowledge investor get from the market intermediate and the market participant. Rather, people prefer investment in gold or real estate. More money goes to real estate and gold rather than equity. But from the economy or the country point of view, we consider gold and real estates are that not a good assets or not any economic significance from the country point of view, whereas the investment in equity and the capital market by way of debt, bond or maybe equity are contributing to the some contribution economic significance for the country and the economy. So the investment in gold and real estate doesn't serve the purpose or any development growth for the country, although they are also the asset class. Some part of your saving could be into that part also. But equity, the weightage and the ratio people should be given in their portfolio or on their asset management, that is not given so far. The reason behind is the lack of knowledge, lack of awareness, and a lot of mis-selling also happen in market, although SEBI is trying their best to regulate the market, to keep check on such things, but still bad elements do the wrong things. But we are trying our best. We are also the kind of a self-regulatory body who try to check all these kind of things. But it's a need for investors also need to understand between trading, speculation and the investments. And the stock market in countries like India, where we are continuously looking for the lot of FI money and the FDI money, we internally have lot of saving in India. Saving rate is not less in India, but we are not able to channelize into investment. So there is a need people, for the youngster, to look upon the stock market, but in a safer way, better way, so they can see the things in a good prospect, in a good way, to have healthy return. Although the markets, stock market, when we discuss, there are two parts. One is equity market, one is the bond, debentures or the other kind of products. Any product which is related to equity, it could be equity, it could be mutual fund, it could be equity derivative, it could be ETF. Always there will be underlying market risk. Equity market is never risk-free market. You may see the Sensex level at 30,000, 20,000, 10,000. Not at any level you can say it is safe now, or not at any level you can say it is expensive now, because the underlying risk on the equity will be there. Although it's a good asset class, over a period of years, last 30-40 years, it has given handsome return, and India is a growing country. We all are hoping to do good in next 30-40 years, considering our demographic dividend and lot of young population and the growth. But still, equity market at any particular point difficult to time out. So there will be always some kind of risk will be there, particularly related to the timing. Suppose I invest today, I will be in a very good position after 10 years, but maybe in the 7th year, in case I need a sudden money, on the 7th year of my investment, that year market may be too bad. There may be some global event, some war, some recession, something like that. So some part of your total investment or the total saving could be in equity, not the entire money, but a considerable part could go to the equity. So there is a proper financial planning needed, that is individual to individual, proper risk management needed in that, lot of technicalities are that. So it's a subject very vast, need for understanding. For small to retail investor who don't have much of money and who don't have much of expertise to hire the financial expert, simply they can go for the mutual fund, and moreover the ETFs, exchange traded funds, and in that also the index funds. We index are the best funds that do the portfolio management itself, because like Sensex is the index, the most popular index and the important parameter of the Indian capital market, is in the existence now. Its base year is 1979. If you see the Sensex return from time to time, and you can be with the Sensex, so you are with the economy. You are almost following the economy if you are invested in the Sensex related funds. So they are the best parameter, because the market capitalization is the first function why the company is in that particular index. Any company who is losing value and losing the market cap automatically goes out of index. So exchange is doing the best portfolio management. For small to medium investor, retail investor who don't want any R&D or any expertise separately, or cannot hire the financial expert, the best way to invest in the exchange ETFs, and the out of exchange ETF it could be index ETF, one of the part of your investments. There are a lot of other avenues and other part where you can study and see the things for the financial detail. And the BSE website is the another very good website in the field of financial market. A lot of information has been given, and all the company details, all the listed companies, their profit, P&L accounts, quarterly results, shareholding pattern, any disclosure by company, EPS, their P. Lot of information has been given on the BSE website regarding various companies. All the disclosures and the corporate announcements are given on the website, disseminated online in the immediate, almost real-time basis. So it's a very vast subject. The bseindia.com, the website one must follow in your spare time if you are interested in this field of stock market. A lot of other things we can discuss in various parts, but as a part of Bombay Stock Exchange, I feel the investment is the need for the country, for the individual, and we need to understand the difference between trading and speculation. So we should prefer and we should advise the investment related in products rather than speculation. And trading in derivative is very risky, and we have seen a lot of people have lost very heavy money in the equity derivative in last 1 decade. Although it is allowed, although it is permitted for retail investors as well, there is a specialized field of study and trading, specific skill set needed and with heavy risk. So small to retail investors should avoid such products. Stock market we need to improve by introducing more and more structured investment products where people can invest and relax. So some fixed income products and some variable income products. Some innovation is needed. Some rebranding, repositioning of the stock markets is needed to have the confidence of common man and the layman in this field. Another interesting area is the SME, the small and medium enterprise. Then the recent times government is putting a lot of emphasis to give a chance for the small and intermediate enterprise to raise money through the capital market. So SME listings is the another area emerged on the stock market. In India, a lot of SMEs are there. More than I think 5 lakh companies could be the listed. And the small SMEs, they may be listed. They prefer listing, they may not prefer listing, but we should tell you there are a lot of advantage for the small and medium enterprises to get it listed. It adds goodwill to the company, is easy access to the finance, and it gives more regulatory way of running the company. It's easy for such listed SMEs to raise further finance, even sell their product. It enhances their goodwill in all around. Bombay Stock Exchange is the leading in the SMEs sector. It is started 2 years back, and we have around 120 companies listed as of now, and we are the leader in the field of SME. Small and medium enterprise companies are even the government's main thrust. They should see the field of capital market for the raising money, for their finance, for the expansion. And many of these companies are also moving to the main board of the Bombay Stock Exchange main board after listing in the SME. Once they cross their paid up capital and the market capitalization beyond a threshold, they move to the main board of the BSE, the Bombay Stock Exchange. And SME we are encouraging, we are doing a lot of education seminar series for the entrepreneurs, for the small and medium enterprise companies in the various industrial towns, industrial belt, to educate them how to get it listed, what are the benefits, and so give the chance to the small companies and the startup companies for to have raised capital through the capital market. Even the startup companies, BSE is planning to set up a separate platform within the BSE to give a separate segment as a startup company, but still final guidelines are awaited from the regulator SEBI, and we are working very hard on that part also to give a chance to the startup companies. Even government is also very enthusiastic to give the startups the way of through the stock market beyond the regular debt way of raising the money. Another part I wish to discuss our most important index is the Sensex. Sensex is considered the barometer of the Indian capital market. It is the most important index. Its composition from the investor's point of view, a lot of the financial analysts and the people who are associated with this must be knowing the composition, how it is calculated, how it is computed, what is the role, what is the methodology behind Sensex. But for the retail investor, small investor and the student, I would like to throw some light on this Sensex, the index. The index is computed on the basis of 30 companies. First parameter is their market capitalization. The market capitalization of the company is considered to be the part of the Sensex. The companies by the way of their highest market capitalization is the first way. Another way we look the industrial representation, how this company is represent what kind of sector. So all we prefer that all kind of leading industries or the important industry who contribute to GDP or the important sector of the country are being reasonably represented in the benchmark index in the Sensex. There is an index committee who decide all this. All these parameters are fixed that can be viewed on our website bseindia.com. Market capitalization, then your industrial representation, then liquidity and their financial performance. All these things decide together whether company to be the part of Sensex. It is the committee who decide basically on the set rule, regulation and the guidelines given to the index committee. On the mutual fund side, the very interesting fact we have seen in last one and a half year is the increase in the investment through SIPs, systematic investment plans. That is another very good route for the investor. As I earlier focused on the mutual fund, but on the systematic investment plans, this is very good way for the investment, because on a regularly you can keep saving and some part of your saving goes to the stock market. It depends upon what kind of fund or what kind of AMC you have opted. First you have to opt the AMC, which mutual fund you are going for. Second is the what kind of scheme you are going for. And then it is a one-time investment or is a systematic investment plan. But the majority of the investor and the trend we are witnessing in last 1 year is the SIP. Majority of the people are preferring systematic investment plan because it's average out your investment. There is no risk because market I may feel today is very high. I will wait for the little lower level market to come down, then I will invest. But I may not get that chance ever. And the same way I feel the market is very low and I invest full of my all the saving in one shot and later on market goes down. So to eliminate all such risk and cultivate the habit of regular saving, SIP, systematic investment plan, is the best way. It also doesn't give the burden in one shot on you and also cultivate the habit of saving. Systematic investment plan is the best, and secondly it's average out all the low up and downs of the market. And if you invest for the longer term, let's say 10 to 15 year, 20 year in SIP, so you perhaps may get the best return depending upon the what kind of SIP you have put. It say index ETFs or the ETFs or the particular stock or particular portfolio or what kind of scheme you have opted. But broadly you will be much better off than the many other way of investments. Through SIPs are the important part of the mutual fund these days. The best part is that you can invest in various parts regularly on monthly basis, like we pay various kind of EMIs. If I have taken a loan for car or house, we pay EMI. Similar way for investment also SIP is the best. Then comes to the risk management. Risk management all these days at the exchanges are very good, and it is done everything electronically, hardly any manual intervention. Rules are set broadly by the SEBI. Exchanges implement that, execute that. It is done almost by the technology. Manual interventions is hardly there. Then lot of technology we have applied for the education also. Lot of webinars and a lot of things we have provided on our website, tutorials for the students, for the new investors, for the startup companies to know about the various rule regulation latest happening in the field of capital market. We have a separate institute also for the education that provides us specialized courses in the field of capital market, very unique institute and very prominent in Bombay, the BSc Training Institute Limited. That is the 100% subsidiary of BSc Limited, that offers various kind of courses related to financial market, career oriented courses. Even in Delhi regional office, we have a small branch of that BSc Training Institute that offers various kind of such courses, very useful for the students for their career. And Bombay Stock Exchange is continually committed for the growth of capital market, investment related culture, and the service of the investor. Our first function is to increase the number of investors, faith of the investor on the market, so a lot of more investors should come invest safely and with lot of knowledge. With these things, we will wish to have continued the series of such event with the MAT Institute to have impart more and more knowledge and the specialized knowledge on various topics and subjects. With these words, I wish to thank all of you to listening so patiently. Thank you.